Welcome everyone to another a lot to talk about. Specifically, the market hopefully not crashing. The market hopefully going back to normal. Which, golly, it was. We had a crazy day yesterday, and I don't think we want to revisit crazy days like yesterday, especially if they persist. That's one thing if they come and go, but if they persist, then it's gonna be a little bit more something to be nervous about. So I still believe, and folks have been asking about this, I still believe that we're still only looking at like a 10 to 15% chance of a solid S&P 500 rollover of somewhere around 15 to 20%. So in other words, I think it's there's a pretty small chance that the S&P 500 is going to roll over pretty largely. Is what I believe within the next 3 to 6 months. I think it's more likely that we're going to have a euphoric rally instead, but I don't think that euphoric rally is going to last. I think we're going to see a lot of this mixed trading for the next year, and so this is something that that'll be very interesting to watch as it develops. But let's go ahead and take a look at how stocks are opening right now, because right now it's the market's virtually all green. There are some stocks here to the downsides here, but so maybe not all green, but pretty green today. Which is good after yesterday morning. That's pretty good. So all right, let's see what we got here. We have with GM up 4.37% right now. Out of nowhere, GM just ran up. Actually, that's very interesting. Yesterday, I did see a headline about GM, but I don't believe it was a positive headline. I thought I saw a negative headline about GM, so I'll have to get to the bottom of that. We've got Weed Maps up almost 4%. Bumble 3.8. API, that backbone of Clubhouse, up 3.59 here. Clove's up. Neo's up. DD. Oh my goodness. DD's back up a little bit. Now, DD's been one of those that, well, obviously here has just gotten the brunt of China's might and their anti-billionaire, anti-tech company growth, attacks. I don't know how else to put it, but I mean, you look at what they've done with Jack Ma, Alibaba. You look at Didi here most recently. That's rough. Now, as an investor here, I can't help but think that maybe there's an opportunity to, just at the worst point, try to buy a call option on Didi. But I think that'd be a little bit more gambling than investing. Although I'd love to ride a rebound on Didi. Probably won't do it myself. It is something that's very tempting, though. So we'll see what happens there, because quite frankly, I do think it's a great company. I think they've got great earnings. I think they are substantially larger than Uber and Lyft, and substantially more stable. They just have the downside factor of being in China, apparently, which shouldn't be a bad thing. It's just government's been rough. All right, so then we've got Arcimoto back up at 2.88%. Arcimoto yesterday was something that was crazy. Arcimoto yesterday was down like 10% at one point, and ended up, after all the madness yesterday, up 1.83% in the day. It's just a bizarre world we're in. I think that's just the easiest way to put it. It almost felt like and I think a lot of people think this, and it makes sense. Almost felt like an institutional attack. Just everybody coordinating their panic sells suddenly, especially since a lot of these things happen in the pre-market. It's odd, very odd. Let's go ahead and pull up short interest for AMC. That should be interesting. Let's go do that, because something else we're looking for is a bump in short interest for AMC. Yeah, let's see what Ortex has for AMC today. All right, let's see here. So AMC, let's go ahead and grab what we've got here. AMC short interest, no, about roughly the same, maybe fractionally higher from yesterday. 18.98%, almost a full 19% here. Estimated short interest percentage. Yeah, you could see that. that movement right here. Slight little movements up. There you go. Yeah, tiny little bit from yesterday's 18.85% to 18.98. So still not seeing a heavy run in short interest data on AMC, but something to watch. Then we've got recovery coming back. Well, at least travel. Let's see. We've got American Airlines here. We've got Darden here. Spirit, Riot, Carnival. Yeah, interesting. You've almost got a little bit of a return of travel today. Let's see what's not doing so well. Going to the downside, Virgin Galactic selling off 1.5%. That's if this is the worst stock. Yeah, this is the worst stock on our watch list right now. Well, you go to recently viewed, and U-Time is having more pain. But yeah, Marin was down 8.21 yesterday, but up 7 right now in pre-market. We'll see how that goes. Hey, look, Beachbody's up again. Anyway, take a look. I mean, just you've got Bumble, Didi, Weedmaps, who are very interesting. No real massive shifts today. Just almost like it's almost like we get a chill day after yesterday's insane day. So let's take a peek at crypto as well. All right, get off options for crypto. One day we'll have crypto options. All right, there we go. So let's see what we got here. So yeah, yesterday we were really bouncing along our support line here. Yeah, you could really see that here. And now, just in the last little bit, we seem to be breaking away from it. We've got a stronger support line drawn here at about 32,696. I'm going to strengthen the support line a little bit because now we've seen this, Bitcoin really play this line, either slightly below it, on top of it. You're starting to see a little bit of a breakout here. We'll see if this ends up running back to some of our other supports. But this was interesting. This was an interesting follow-up dip here, but it really proved that support line a little bit more. Good. So that's Bitcoin. I do want to figure out why GM's doing what it's doing. Let's go ahead and listen to CNBC for a moment. I'll pull up the terminal.
But to quote the late Roger Ailes, when I first decided to disagree with him when I worked at Fox,
yes,
you are really off the reservation.
Did he say that to you?
Yeah, he said I was off the reservation. The FDA is off the reservation. That's one of the more frightening periods of my life, by the way, when I worked for Roger.
I do want to come back to something that I've been following now for, amazingly enough, let's call it almost a year and a half or close to it, which is, now a drug called molnupiravir. We've talked about it a lot. It's the Merck drug. It's an antiviral. They are in the midst of phase 3 study around the world, enrolling as many as 1,450 patients who know they have COVID, but it's early, right? You give them the oral antiviral and you see what happens. In India, exactly. Hetero, which is a company that is a vertically integrated pharmaceutical company in India, they actually had a voluntary license for this.
I'm going to pull off that. we'll jump on over to Fox or something else. Let's actually, Fox is sitting on please wait, so we'll wait and come back. Okay, we're going to find out what's going on with GM here in just a moment. Ford also coming up 2.85% though. It's political. Okay. All right. Well, never mind there then on Fox Biz. So yeah. Okay. Well, let's in that case, let's try also Virgin Galactic. Let's see what we got here. All right, Virgin Galactic. I don't even know why I said that. Let's try Bloomberg Live over here. All right. And we'll get through this ad. Here we go. Let's see what Bloomberg's got for us.
Because the market is starting from such distorted levels.
Hey, Kathy, that's the big confusion, and Mohammed is bang on. People don't understand the economic data. They don't understand how the market will respond to the economic data, and I don't think we have a clue right now with any degree of conviction, confidence, or accuracy on where on earth we are in this cycle. The kind of reaction function that we're talking about at the moment is something you would expect a little bit further down the line when you're looking for Federal Reserve rate hikes at a time when the Federal Reserve has said we're having no part of that. Do you think there is some confusion about where we are in this cycle at the moment, Kathy?
Oh yeah, absolutely. I mean, this is not like any cycle we've had in the past, and so this is.
Hey, that's not our Kathy.
In such a wide range in the Treasury market. You came into the year people expecting rates to stay low. And the rebound in economic activity was so much faster than expected. Yields shot up. Now, we have hints maybe of a little bit of a slowdown where Fed reaction functions come back down again.
Right.
I think that this is going to be the story of this expansion, however long it lasts, that we're going to see a fair amount of volatility until we hit some sort of a glide path. And right now you have that argument between, is the glide path going to be back where we were before, slow growth, low inflation, the demographic argument that we're in a permanently slow environment, or is this a new environment where it's strong fiscal policy that's going to lift growth and inflation to higher levels? And I think that's going to be the argument that goes back and forth in the bond market for probably the.
That's interesting. I mean, it's not a bad point to mention that this is such a historically weird and unprecedented recovery that it is kind of hard to look back at history and say, hey, well, this time is different. There's got to be a pattern somewhere. It's tough. Some people like to point to the what we saw coming out of the late 60s, right before we ended up going into big inflation in the 70s. Personally, if there was any point in history I've been trying to point to, it's actually really been the early 50s after Korean War. This is where we came out of inflation, temporary inflation, temporary war-style inflation. And after that temporary war-style inflation, we ended up with no inflation, basically, for the next 2 years. I'm sorry, 2 years. Nearly 20 years. Nearly 20 years. It's crazy. So it'll be very interesting to see what happens here. But we're even getting more. Here's another headline: growth concerns. Yeah, that's exactly what we saw yesterday when we opened up the live stream yesterday. I opened with the market is reacting to fears that we're not going to grow as quickly as we think. And this is one of the reasons that I've been saying, look, while I think there's going to be an inflection point in inflation by September, October, and that's going to lead to some form of a euphoric rally, I don't know how long it's going to last. Let's take a look at this. And we need to be aware of that if we're going to see some kind of rally, and this is just obviously my opinion, I could be totally wrong, but if we're going to see some kind of euphoric rally and we don't think it's going to last, we want to take advantage of it as soon as possible. Anyway, 5 things you need to know to start your day. Okay, well, let's say, where's the open and shut, the divide between, let's see, markets mix, blah, blah, blah. Where's the growth part? They ran this headline with growth. Okay, here we go. The epicenter for growth concern is Asia, where stuttering vaccine progress is overwhelmed by the resurgence of the coronavirus, slowing loan growth in India, and the Chinese crackdown on tech are adding to fears that the post-pandemic recovery in the region will crawl rather than sprint. Prospects for growth in the U.S. remain much stronger, with JP Morgan, BlackRock, and Morgan Stanley all saying there's a reason for optimism. Thank you, by the way, for Katrina for mentioning the extension of the discount. Appreciate that. That it has been extended for the programs linked down below to the 22nd of July. Sensei's here, breakfast Tommy. What's up, man? All right, so what do we got here? Some of the world's biggest money managers are betting on a swift comeback for battered reflation trades. Oh, this is interesting. From July, and see, that I'll tell you is something that I think is so neat about what we have going on in the economy right now, is you literally have this 50-50 world right now where half of investors are thinking big inflation coming, invest in reflation trades, the cyclicals, the recoveries, the travel, the retail, the hospitality. And you have the other half that's like, no, low inflation coming, invest in tech. It's interesting. And I think as long as you believe where you are, you can invest appropriately. But if you're vacillating, you're like, oh, well, today I'm here, today I'm there. It's a little harder to make investment decisions. So let's see here. They say that the global recovery is still on track. Rallying bonds has gone too far. Oh, so they're basically saying the 10 years has fallen too much. See here, they argue growth is going to be very strong, and we don't think the market has priced in enough rate hikes in the future. Wow. So you literally, you could literally find articles on basically anything, whatever side you want to take. There are people to to basically side with you. All right, let's look at treasuries, and then I do want to figure out what's happening with the treasuries 10-year. Let's go figure out what's happening with GM as well, and we'll go back to the sticks here. Wow, yeah, hey, look, the 10-year shot back up. Wow. Yeah, 1.34%. It's certainly a lot lower than what we got used to in the last few months here. 5-minute chart here, or 5-day chart not loading here. But it's definitely up from yesterday. Yesterday it was 1.25. A little bit of an overcorrection yesterday. And quite frankly, that's what it felt like a bit yesterday. Somebody was asking me in the comments, hey, do you think this is an overreaction? My belief yesterday, I still kind of believe it today, is that I think this kind of volatility is something we can expect to happen more often, because I think the market's just clueless. The market just doesn't even know what it believes. So the average is so weird right now that the market's just clueless. We'll see. All right, let's listen to Fox for a moment.
Microsoft down 0.5% in the very early going. Now this, despite the 9.2 million open jobs, the number of workers who have been out of work for at least a year actually surged in June. So come back in. Lauren, what's the number?
2.9 million people. 29% of the unemployed have been unemployed for at least a year. It's mind-blowing.
Wow.
So these are likely people who lost their jobs early on in the pandemic. Think, leisure and hospitality type workers. And they've just been waiting to get a new job. It blows my mind because there's basically one job open for every
Thank you, Jerry, for saying GM stock jumps after Wedbush analyst calls it a disruptive technology play. That's interesting. I do want to mention that actually, hold that thought for a moment.
Yeah. Especially come September, you might want to get back in there. But imagine that, about a third of the workforce unemployed for at least a year.
Oh. And the clock is ticking, as you point out. Yeah. Thanks, Lauren. Now this, a change.org petition calling for a fourth stimulus payment just hit 2.5 million signatures. And the petition wants Congress to keep sending checks until the crisis is over. Of course, why not? Let's bring in Mick Mulvaney. Great to see you this morning, Mick. Are we becoming a handout nation?
Oh, man.
Good morning, Ash. By the way, happy Friday. Thanks for having me. I certainly think there's going to be a small percentage of this country that wants free handouts from the government forever. 2.5 million signatures on that petition is a lot of people, but let's not lose sight of the fact that it's less than 1% of the population of this country.
All right, let's go ahead and pull back here. Let's jump back over here. Yeah, but I also think more than 1% would be signing it if they all had it in front of them. I would be surprised if you had like at least 40 or 50% of the population sign that if they were asked.
Trump obviously was pro-business. This is a stance that you cannot describe as pro-business. This is more, I think, it's actually more aggressive.
It depends what business you're talking about, doesn't it? They would say this is pro-business because this is pro-competition and it will actually result in more innovation. I'm not saying or more companies being able to compete in a way that they might not have previously. It's very much unclear that's the case. Well, by the way, wait for them. They're never going to go after trying to break up a deal that already has taken place and closed. That seems hard to imagine.
No, but I found the entire ride post fatuous.
All right, we're going to pull off this. Let's go back to sticks here. All right, so So it sounds like then on GM, it was really just an analyst upgrade or the way they're marketing it. That's what you need to be. If you want to make a lot of money in a job, you just need to become one of those analysts where you could basically buy a stock and then have some kind of like bullish or bearish statement, or upgrade or downgrade a stock, and then all of a sudden it moves like 5%. That'd be cool. I'm sure nobody uses that for their own gain ever. It's ridiculous. My gosh, crazy world. Anyway, Neo going back over 45 here. A little temporary pullback there. Same thing with ChargePoint. Both interesting companies here. Both I think are great. We've got Workhorse, and somebody donated $1.99 to ask about C3AI. Yeah, C3AI. I think you've really got a great SaaS model here, especially in partnership with Snowflake. Now, it's probably worth a separate video on a deep dive on C3AI. So I don't think it's very well understood. But you've also got, looking at the techs, this thing yesterday falling just below its support line here, which it really rarely does. So we'll see how it does here. But it's been very magnetic to a pretty dang strong support line here for quite a while, since March. It's sat through since March, riding this line, with the exception, of course, here of May. But May was a complete disaster. May was really, in my opinion, peak inflation. In fact, somebody yesterday had a good point. They were saying in the comments, like, "Hey, Kevin, why is it that lumber was at peak pricing in mid-May, and technology companies were at rock bottom in May?" See, look at that, May 13th here. You know, what's interesting about it is not only did tech companies hit rock bottom right here around May 12th and May 13th, and lumber hit peak around May 13th, May 12th, but you also had CPI data get released around May 12th, May 13th. So you literally aligned the bottom of the market in May with CPI's with the CPI data release for April, peak lumber, which is potentially a symptom of peak inflation, and bottom technology prices, which is also a symptom of inflation fears. So this to me was our peak inflation moment. We'll see how we grow out of it. We'll definitely see. What's the short interest on DraftKings? Oh, well, thanks for the $10. Yeah, let's see. Pull it up really quick. Oh, and I do want to get the Black app going as well for a short interest check on some of the others. I want to say, and this is just my belief, but I believe that momentum, and I've been saying this for almost a month now, I think momentum and folks looking for short interest stocks has kind of subsided. Like that play has become a lot harder. But let's look at Ortex for DraftKings. Just my take. I'm not saying that short squeezes aren't possible. Just saying that I think it's less important to the market right now. Yeah, sitting at 9.36 on DraftKings, so not too dramatic here. Let's see if we got the, and then over here we'll do. Let's see here. All right, let's go DKNG. Yeah, DKNG on Bloomberg's Black app, which is actually S3 Partners, sitting at 8.22%. So barely a move there. All right, what's Jim got for us? Let's go over here.
Ford is still your favorite.
Ford is number one because it's almost impossible to get. I am getting a Ford Maverick, okay?
Mm-hmm.
Well, I'm looking at it. I'm hearing delivery time 2022.
Well, Teslas are also not showing up quite when they said they would either.
No.
I know some friends are
But
still waiting.
Tesla's ready.
Yeah. Yeah. All right. Well, you get ready because we got an opening about 5 minutes away. Stay with us.
Okay. But yeah, think about that. The short interest stocks just haven't been the big momentum plays. It's been stuff like Emrin. You know, like why? There's no reason. All it is low flow, low market cap, and something that can be taken advantage of by a large group of folks. Which, don't get me wrong, hey, anything to take advantage of Wall Street, go for it, in my opinion. But, you know, the short interest play, it's got a lot more difficult. All right, Black App says AMC's at 19.54%. Also up a tiny little bit, but not much. All right, going back to the sticks. See if there's an opportunity. I still also, it's worth mentioning because I have seen some comment. Gosh, the slam on Ford. I fix or repair daily. Do you think meme stocks, cryptos will come back? Yeah, that's what I was wondering. You know, Shiba Inu. Yeah, no, I know there are a lot of different coins. Actually, it would be interesting to see how Sheeb's doing. Let's see really quick. Go to CoinMarketCap. But then I do want to mention something as well. I gotta remember this. Okay, Shiba Inu. Ooh, yeah. I mean, this looks like a very classic momentum chart, right? And look at it. This literally looks like AMC right now. Gosh, that literally looks like AMC. Moon and then consolidate. Now, not as bad of a drop, but it's that similar style. The moon's actually much closer, so maybe it's not so much like AMC. But you do have that hodler audience that goes in. Yeah, maybe not the best example. Maybe it was a little bit of a better example when we were trading sideways over here, because it felt like, we ran up here and we had that sideways consolidation at a higher level, which was between these two support lines, the 50, 85 and 60, 96. But recently we've fallen a little bit below that. So it's kind of like, the straight up and then over. So, maybe let's try GME. But then I want to say something about options. Yeah, well, not really. All right, never mind. Bad analogy then. Okay, so look, I want to mention this because there was still, despite me having explained it like 3 or 4 times yesterday, there were still a bunch of comments. Not a bunch. I mean, small bunch. But anyway, there were some folks who were like, "Oh my gosh, selling puts sounds so risky." Not really. See, the beautiful thing about selling puts is you literally take your money, you get your money tied up, whatever money you have, especially if you use Webull. You take your money and you're like, I'm willing to buy, let's say, SoFi. Boom. And you put that money aside. The money's there. Whether it's margin, that's potentially a little bit riskier, but whether it's margin or actual cash, the money's there when you sell a put. And so your risk is limited in the sense that your money's already put aside. And you're actually getting a discount on the stock if you hold to expiration. No, to me, selling puts seems like one of the least risky options that exists. But I think some folks just really don't want to know. What's up, Kev? Finally ready, signed up for Stocks and Psychology of Money. Can't be happier. Oh, Tommy, thank you. Appreciate having you and look forward to seeing you in the live stream, which will be after this. Watch Lecture 1.0. Okay, now, no massive movers here. Oh, DD now up 5%. That's starting to run a little bit. Let's see how things open up here. In fairness, the bell is going to start here shortly, and we are expecting to see Ross Gerber at the opening today. So I'm going to pull up his ETF here, if I could. All right, let's go ahead and get the bell. Let's see if we see him. There he is. There he is. He's right there in the middle. It's Ross. There he is. That's so cool. Hey, we've talked to him. We know him. I actually had an opportunity to potentially be there, but would not have worked out at all. Look how green the market is today on Ross Gerber's day. That's freaking awesome. Go Ross. Oh, man. That's so cool. Yeah, I super wish I could have been there, but I've got lots of travel coming up today. It's going to be crazy. All right, let's go ahead and see. We got 5 rallies coming up this weekend. So if you're in Southern California, 5 rallies coming up this weekend. So go to meetkevin.com and sign up and join me. It's totally free for you to come. But anyway, DD, let's just go to the full chart here. We'll get off the single chart here. So DD, how are we operating here on DD? Are we getting? Yeah, we're getting that recovery push on DD. It makes you wonder if DD is going to be that potential speculative return here of okay, the worst is over for DD. Let's get in on the DD now. But make sure you do the DD on the DD. I don't know why I always have to say that. I'm sorry. I apologize. Clever Leaf Holdings. Gosh, this one's been trading sideways forever. Arcimoto 4.17%, GM 4.37%, Mind Medicine 3.36%. No, DD rotating back down, so no real excitement there. A lot of green on the board today. MMAT Metamaterials down 5.13%. Virgin Galactic falling a little bit more into the open here, 3.77%. Excel Fleet is down 3.52%. Intelia actually down a little bit, but golly, I mean, this one just shot up so crazily to the 150 range. Oh my gosh, it went to 202 at one point. A lot of excitement has gone into this one after good news on their research. So Redfin, Zoom, Desktop Metal, all about 1%. Not too exciting today. GM's kind of softening a little bit. Churchill Capital up a little bit here. Churchill Capital up 2.84%. I've got a sold put on Churchill Capital and SoFi right now. And how's SoFi doing? SoFi up 0.75%. The longer SoFi trades sideways, the better that is. MRIN, look at MRIN run again. Unbelievable. There's the potential runner today. Yeah, it's almost like the Wall Street Bets group is looking for, okay, what's the runner today? What's the runner today? Look at that, even Newegg. Even Newegg's running today. There we go. Let's make sure they're both on the watch list. Okay, let's go over here. So there we go. Emrin and Newegg. Oh my gosh, they just don't give up after being down substantially yesterday. You can't stop the Emrin. Oh my gosh, it's nuts. Newegg 7.21%. Newegg's such a great company though. I like Newegg. Like fundamentally, I actually think they're a great company. Hut 8 Mining up 2.47%. Mostly green day today. Good job, Ross, for bringing in the green. So am I worried about Tesla earnings? Not really. So thanks for being my investment therapist. Oh, healthy junk food. Thank you for saying that. Healthy junk food also sounds very nice. Looking at the downside, not that much. I mean, XL Fleet, costs, Meta, Virgin's even recovering though. Workhorse 1.63 here. Pinterest down a bit at 75. Big deal. GameStop 190. He's off that 200 level. Tesla. Here's Tesla. Down again a little bit. Down about 1/3%. Just having a fun ride, that one. Tattooed Chef just under 20. All right. Yeah, it does look like Newegg and Merit are going to be the runners today. We'll see how that goes. Not Didi. All right, let's listen in over here.
You do need to know things about individual industries, and that's what Biden should be focused on, because that's where the people are ripped off.
You know, getting back to financing markets, so I had Mark Schaefer join me yesterday, of course, global head of M&A at Citi. I mean, he talks about the financing markets being just so wide open. This is another example of that, the Stamps.com transaction. And yet another, I'm sure you saw today, that
Churchill Capital up 3.41%. All of a sudden, Churchill's running. Take a look at this. Churchill Capital just taking off here. Right next to Nordstrom. This is such a bizarre market. You can't group this market anymore. It is so bizarre. Yeah. All right.
A great company. You see certain numbers. It's almost impossible to get the mortgage rate that you see posted.
What's your point, though? When I'm talking about high yield, now you've moved on to mortgages.
I'm saying that it's entirely possible that not everybody can get that high yield rate. There are some companies that are not.
But it's the average. That's what we're talking about.
Yes, I'd like to know the median.
Obviously, you're still deciding what, yes, Carnival Cruise is not going to get that rate.
Right.
For something percent. Although maybe they are now. I don't know.
Carnival buying back some of that 11% paper.
It does go back to the overall point, which is the capital markets have been so wide open. Liquidity is enormous. Does that concern you at
Yes,
all,
that's
Jim?
why-
Taking
yes,
a
it
broader
does.
view of history, looking back at 2007, and you know,
I think it does. I think that the Fed should be looking at whether. Remember, I wanted the Fed to be examining mortgage rates in 2007, not everything.
Right.
I think the Fed should be saying it's not about mortgage bond versus not mortgage bond. It should be, are we making credit to available?
Yep.
And are we being tough enough because we've got companies that where the Federal Reserve doesn't come in and say, you know what, these loans could all go bad.
Oh my gosh, Brandon, you called. You got 1 week calls after my mention on Nordstrom, and now he. Oh man, 1 week calls. Hey man, it's up 3.2%. The 1 week calls are going to be up a lot. Might be an opportunity to take some money. That's awesome. All right. I don't remember what I said about Nordstrom, but wow. Okay. Well, good for you. All right. Let's see what else we got here. Yeah. Look at that. Macy's, Gap, Nordstrom, Ford, Simon, Build-A-Bear. All these, actually quite a few of the recoveries back today, including Cheesecake, Rite Aid, even Shift Tech is coming back a little bit. Neo, JPM. Here's Coinbase. Pretty green day. You do have the red over here. Virgin Galactic struggling, bouncing around 4% to the downside. Meta Materials down about 6%. AMC going red again. Yeah, AMC dropping here at the start. All right, so what do we got? AMC really coming back down to 46 right now, which is roughly where we were trading yesterday. Just gave up its gains for the morning. Okay, it's pre-market gains, so not really gains. Now it's negative. Newegg 17% right now. It looks like Marin and Newegg just swapped. Fascinating. All right, let's try Bloomberg. What do we got?
Equity and bonds.
Phil Guaco, your reaction to that?
Yeah, I would tend to agree, but I would reiterate, maybe thinking back to Reinhard Rogoff, who in their famous papers said that, increased debt loads at the national level, especially at the government level, mean lower growth. I think that's misunderstood in some ways. It's not just the growth in the national debt, but it's really how that could limit policy actions in the future. So I think, as Mr. Barron was saying, we've done, or the government and the Fed has done what they needed to do. But each time we do this in massive ways, we wind up having a little bit fewer bullets for the next time. And if we have fewer bullets for the next time, and it seems as though these shocks seem to be accelerating, maybe the method we get out of the next one, because there's always going to be a next one.
Yep.
We're not going to be as strong as we have been in the past.
We're getting into cycle calls here. And John, the call you're making that we don't expect another decade-long bull market in stocks and bonds, to your point, that's not going to be another issue for a couple of years. So I guess the question for me is today, if that's the cycle call, is it relevant to the call I make today as a market participant? Does that affect my investment decisions right now? Or is it something to worry about further down the road?
I think for now, and to the point that my colleague was mentioning, Mr. Garco, the debt level is a big part of the story. I think that's why rates will not be able to go up materially over the next few years. That's why it's an environment we're going to see inflation creeping up to some extent, but rate remaining muted response. So real rate will be low. And for now, I think it means a pretty constructive environment for risk, something we've not really seen before. We're going to see some inflation coming through, but that won't be detrimental to equities in our view for now.
I'm going to pull off this here. Interesting that he mentions that, hey, you could actually see a potential, potentially rates staying lower longer because of the United States debt level. Interesting.
F-150 is America's most popular pick.
Yes, I'm aware.
Jim Cramer is always on Ford. Oh, man. I just want Ross to walk over and, smack Jim Cramer and go, Ford, no. Mostly because if you haven't seen it yet, you should type in Ford versus Tesla, meet Kevin into YouTube. I posted a short of what Ross Gerber thinks about Ford. And it's let's just say he really likes his Tesla. It's kind of funny. I don't dislike Ford as much as he does. Nordstrom's still running here. Take a look at this. Still got that 4.18% on Nordstrom. Ford is up 3.36% after the you got that move on GM as well. Hut 8 Mining up 2.68. Cheesecake up a bit here. Bed Bath & Beyond, Geo, Gap, Marin, Newegg. These guys are running today. Simon Property Group, a lot of the recoveries coming back. Churchill Capital slowing down a little bit on its recovery here. Yeah, Churchill Coinbase 2.8. Very slow day. Just a slow kind of mad day. Nothing's really fallen heavily to where it's like, oh, let's sell some puts over here. Pinterest 136. No, not super snazzy. All right. Well, let's see if Fox has anything for us. We might try the headlines over at Bloomberg as well. Let's go see. Okay, well, they're on commercial. All right, fine then. So we'll go over here. All right, let's see what we have here. So front side of Barron's Roundtable, Fox Business, momentum trades. Hey, they're using our phrase. So I don't like the meme stock phrase. It's momentum. Real estate agents target record $100 billion as home sales boom. Yeah, we'll see how that continues. I'm not bullish on that continuing after I saw that Redfin data center report. If you've not seen my video yet on real estate, watch that one. Meet Kevin, real estate or housing market. Melvin struggles. Oh, look at that. Melvin struggles to shake Reddit attack with 46% loss so far. Ouch. Oh, look. Hey, they're up 1% in the last month. Really? From June, or in June, they're up 1%. Wow. Melvin now calculates its loss in the first month of the year at 55%. Ouch. Worse than expected. Ending the first half of the year down 46%. Oh, that's, well, that's what happens when you short stuff to death. All right. Here's a report on hotels. Listen to this.
And the reason was July 4th, the way it fell right near the weekend, a lot of people went away. But, in order to make this back to pre-pandemic travel story complete, you really need the corporate traveler in airline seats and in hotels again.
Yeah, you certainly do. That is the big money maker. Thank you, Lauren. And, as you say, Americans finally traveling again. Over 10 million people pass through TSA checkpoints over the holiday weekend. That's a huge number. Let's bring in Jeff Hoffman. Jeff, do we keep traveling more, or are we kind of hitting a little bit of a peak right now? Is this a plateau?
That's a good question.
Well, actually, it was a little plateau because of the holiday weekend, but we are traveling more. I mean, that, last Friday, that 2.2 million of those 10 million holiday travelers coming through in one day was the highest total since the pandemic started. But it's rough out there. The airlines did not forecast this demand, and they let go literally tens of thousands of employees. So right now, there's lots of flight delays. There's lots of cancellations that are harming travel. American Airlines, for example, has said that they're 1,000 pilots short of what they need to fly all their flights. And of course, training pilots takes time and staffing. A lot of times I flew last week and there was one person at the gate working the entire flight. TSA, one more thing, TSA also, TSA said they need 6,000 more people and they're short-staffed in 131 airports. So there's long lines, there's delays, there's cancellations because we're traveling faster than we were expected.
This is literally what I felt when I traveled. And when I was talking to people who worked at the airport, they're saying the same thing. Like, we just can't hire fast enough. It's nuts. Like, they physically can't process applications fast enough.
That or has Zoom calls and conference calls kind of still the preferred method at this point?
Actually, it's definitely the latter. On Monday, there was this report put out by Adobe Analytics. They said only 11% of all the business travelers they talked to plan to travel in the next 6 months. It's going to be slow. And I've talked to literally hundreds of CEOs across the country over these last couple months.
What do you all think? Do you all think that business travel is going to come back? That's going to be a big thing especially if you're investing in the airlines. I mean, if you're investing in the airlines, I really feel like the airlines right now they're pricing in a return to basically normalcy. To peak expectations with business coming back. Kind of interesting. All I hear are excuses for weak economic conditions. I kind of somewhat agree that those could be excuses. But I mean, not like intentional excuses, but basically just look, if you guys were making so much money and your debt wasn't crushing you, could you hire more people to hire more people faster? So yes, I just said hire people to hire people. But can't you figure it out faster? Kind of an interesting argument. Not like it used to. Yes, no, kind of mixed. Airlines don't innovate. Kevin O'Leary says no, so we say no. Airports are packed. Also true. Yeah, because everyone's getting delayed. It's a disaster. Yeah, time suck of 3-hour pre-flight. Yeah, it's true. I mean, if you think about it, like a business traveler who has to travel has to get to the airport, at least 2 hours early. I've got it for me. If I got to get to LAX, I got to leave 2 hours early for traffic to be at the airport 2 hours early. That's 4 hours of my life that's gone just getting to the freaking plane. Then you get the flight that gets, like I had my JetBlue flight delayed 2 hours. Now I lost 6 hours of my life. Then you gotta fly. You lose like your whole day traveling these days. It's ridiculous. Travel has been a little complicated. So I think for business purposes, do I really want to go fly somewhere, or do I rather do a Zoom? Now, in fairness, there's some things that are better done in person, like fun Meet Kevin rallies with music and giveaways, which the next ones you can see here on meetkevin.com are San Diego today. I'm flying to San Diego today, Newport Beach, San Bernardino, Santa Monica, Ventura. And if you haven't yet, follow me on Instagram, and you can follow along with my travels. I share stories like crazy when I'm traveling. If I'm just sitting here, I don't share as many stories, but it'll be fun. So follow those stories along on Instagram at RealMeetKevin. Oh, sorry, my Instagram's at MeetKevin. My Twitter's at RealMeetKevin. But anyway, let's get back to the sticks. So interesting perspectives there that y'all have on travel. Nordstrom now up 5%. It's still running. So whoever got those 1 week calls killed it. Good job. It's just, you get these periods of oversell and then you get rebounds. It's the way it works. That just the way it almost always works. Things oversell and they come back up. That's the beautiful thing in terms of trading. If you look at things rationally, things go down like crazy, and then eventually they rebound. Things go up like crazy, and eventually they rebound. Metamaterials 7.13% to the upside. To the downside. Virgin Galactic down 5.77. Tried recovering, was only down about 1.3%, and just fell down a little bit more. Peloton back to 120 here. AMC still sitting down right now, sitting at about 1.75% to the downside right now on AMC. Looking at the chart, it's a little bit of a disaster. Only question is, where's the bottom? Yeah, you'll never really be able to find the bottom. That's the thing. You'll never be able to find the bottom, in my opinion. I mean, you can do your best, but for example, let me show you here. I did very well, in my opinion, at finding the bottom here on Bitcoin. But let me tell you the downside. Okay, so I'll tell you the downside. Sorry, all these lines look absolutely ridiculous when you look at the day chart. It does look a little insane, and I'm sorry about that. Okay, here we go. So this bottom right here, we were tracking this like crazy. And as soon as it started U-turning back to the upside, I bought Cardano. I used my Bitcoin as sort of my tell for when to buy some of the other cryptos. So anyway, I bought. I bought, I don't know, 3 or 4 times in this particular range over here as we were sort of just above this line here, moving up. So as we were moving up, with more analysis on like the 30-minute charts and the 5-minute charts, so a little harder to see right now the other buys. But the point is, you could see the lines that I had been drawing. Drew a line over here, drew lines over here, drew lines over here. There was a lot of work going on for technical analysis when we were sitting around here. The problem is, even though you can identify these bottoms, it's sometimes hard to go like, that's it, I'm going all in, which in hindsight, which is so much easier in hindsight. In hindsight, it's like, yay, it's great I bought here, but then it's like, oh, I should have bought more there, right? Like you always end up having that. So usually what I try to do, and this helps me psychologically, is when we see dips below certain support levels, I just like DCAing below those levels. So use my technical analysis and then just buy. So that way, if you do get a larger dip, like a double dip, or that maybe potentially dips even further, you could also participate in that dip buying. Lately, though, I haven't been spending a lot of money on. Oh wow! Oh, Jeremy says you don't see the delays. Oh, that's interesting. You flew 8 times. You fly 8 times a month. All planes on time. Wow, wow, good for you. But anyway, I haven't really been buying too much of anything lately. I've kind of just been sitting around waiting for the market to do its thing. Piton now down 3.2%. Interesting. But yeah, buying right now, I haven't seen really juicy prices. It's been a lot of I'm gonna sit down and watch, with the exception of selling puts. That's been fun, especially on SoFi. I don't know, they're just so juicy. Shifts up 3% today. Nice. Where's SoFi? SoFi up 0.66, sitting at 1673. This is I really think this 1471 is potentially your low here. I don't know if we're going to get to that low of May again though. So it'll be interesting to see if we create a new bounce level here. Who knows? Maybe is it 16? Are we bouncing back? We'll see. But volume just went nuts here. Sell pressure volume. Remember, folks, lockup agreements this month. Okay, lots of lockups this month. So I wouldn't be surprised by the end of this month we still have pain, and at the start of next month, if we hit like 1471, I probably wouldn't. I'm probably gonna buy some calls, honestly. But I think going into next month, SoFi is gonna be one to really pay attention to. You've got a real potential move to the upside with earnings. Could be wrong, but it's something I believe. I think they're going to do pretty well. We'll see. We shall see. All right, let's hop on over here. What else do we have? Let's jump on over and see what Fox has for us.
Your Honor, this is a big deal. The city would be the second in the world to have this technology, right?
Yes,
No
it is
way.
a big deal. And thank you for inviting me on your program this morning.
Yeah.
This is technology.
Of course they're doing tunnels in Fort Lauderdale too. This is literally what I'm saying California needs to be doing. Build tunnels. My goodness.
Look at the test tunnels and the ones that are already in place to see exactly how their concept works. We feel that we can transport that concept to Fort Lauderdale. We have a lot of people who find Fort Lauderdale beaches to be very popular and very exciting. But unfortunately, our roadways were not built to accommodate the kind of traffic that they're now suffering under.
Yep.
We feel that a transit system, one in which you go underground with lights and music, it'd be an experience in and of itself to take people from our downtown where you can park freely and where there's plenty of parking spaces. Then you shuttle down through the tunnel over to the beach, and in 3 or 4 minutes you're there. You've avoided traffic, you've avoided all the pollution.
Very cool.
Yep.
It's really cool.
Very cool. Very quickly, I'm so sorry we're out of time, but Florida is built on sand and swamp. How safe is a tunnel?
Well, Florida is also built on limestone and water, and I think that the Boring Company folks really knew what they were doing when they encountered water in Las Vegas. Their tunnel is entirely underwater, so those elements can be dealt with, and we're going to be successful here. I know we are.
Well, it's very exciting. We look forward to following the project right along with you. Thank you so much, Your Honor, for joining us this morning. Fascinating stuff. We do appreciate it.
Wow.
All right.
That's brilliant. Brilliant. Oh, I love it. Jeremy, you were asking which option. So easy one for you. I appreciate you asking. But when you click on the link down below for the courses, it's right here. So these are the main courses right here. These are bundles if you wanted to bundle. But right here, Stocks and Psychology of Money. This is the one folks get. When you click on it, just hit I'm not leaving as a bundle code, and then you're in. All right, so let's go look here. Volatility index down 9.47%, 9.84% now. Meta Materials down 8.26. Virgin Galactic sitting around that 5% to the downside. I do wonder what's happening to Piton. I'm going to look at the term really quick. Let me just see what's going on with Piton. If there's any news here, or if this is just sort of a regular mover here. Let's see what we got. Okay, here we go. Piton. Oh, I'm going to answer that question for you. Give me a second. It's a very valid concern what you have. Okay, hold on, though. Let me just look at individual company news here for Peloton, and then I will answer your question. I should have bundled the DIA property management course. Oh, well, you could just send us an email, kevin@meetkevin.com. Okay, so the war to bring Peloton down, blah, blah, blah. No, there's really no news, just some articles. But I don't think the war to bring Peloton down is in iFit. Though new billionaire Scott Watson's iFit started selling home fitness equipment 33 years before Peloton, it got eclipsed, blah, blah. This is just a story, whatever. Okay, yeah, so here's the thing about earthquakes. So the cool thing about tunnels is you kind of want to think about it like when you're in the ocean and you have waves on top of the ocean. If you're under the water, you don't really experience those waves. It's kind of the same thing as tunnels. Now, tunnels, you do have to do a lot of like epoxying around the tunnel shell to make sure it's as rigid and leak-proof as possible. There's obviously a lot of work to be done with tunnels. And you have the issue of what about when tunnels come out, when they basically meet the surface? How are those entrances and exits going to be earthquake-proofed? But otherwise, tunnels inherently are actually very, very good for earthquakes. Property management course has a special guest, and she really knows her stuff. Oh, Martin, thank you for that. Y'all being so nice today. Thank you. Appreciate y'all. All right. Yeah, look, I just want to be clear about the stock market and my opinions, because sometimes maybe I'm not as clear or blunt as I should be. I am overall a bull on our markets. I think we're going to see lower inflation, and I'm a bull on tech. I do just think that the insane growth that we've been used to is not what we're going to repeat next year. It's not what we're going to want to expect. And if the market is expecting that, I think it's going to be disappointed. And it could potentially lead to not necessarily like crashes or falls, which could always come up anyway in the short term, but rather slower growth and more sideways trading, which is bad for call options. Buying call options, not good in this environment, folks. Look at this. In this kind of sideways trading environment, like here on Tesla, call options suck. It's just not good. The sidewaysness kills you with calls. Sidewaysness is great for selling, like selling puts. It's great. So, anyway, Newegg. Take a look at Newegg. This is clearly the runner of the day here. Let's go take a look at the 1 minute. Yeah, look at that run today. That's incredible. That's a nice run. Whew. Anyway, I fly out of here at 2 o'clock today. Fly from Oxnard to San Diego. We got a rally today. And then San Diego today. We got a bunch of places to after that. Newport? I think it's Newport, San Bernardino, Santa Monica, and Ventura. By the way, if you come to the Ventura one, you get to do something very special. You get to sign, if you want, the paper that lets me get on the ballot. I need 60 to 100 Ventura County signatures. So the folks going to the Ventura one will get to participate in that if you want, obviously. I think it's pretty cool. It's going to be fun. I'm going to be on the ballot as Meet Kevin Paffrath. So anyway, have you heard of plasma kinetics technology talked about by Sandy Monroe? He says it's a catalyst for Toyota competing with. Nope, haven't heard about that at all. But I respect Sandy. I think he's great. And yeah, hey, you know, maybe it's something to look into. Even long-term calls for 2023. Yeah, look, almost all of my call options are longs right now. They're sitting at their leaps. They're 2023s. They're Januaries and Marches of 2023. And I've only had them for 2 months, two months and a week. So, you know, I'm very, very early into my leaps. I'm not heavily concerned about them, but I do know that sideways trading bleeds you. It's worth acknowledging that, because if you're in calls and every day you're like, man, why is it red? Why is it red? Why is it red? Which was really just my Tesla ones. My other ones are green. You know, they're or in the black, as we say. I think green is easier to understand. But anyway, like my Enphase, my Piton, Etsy, these are all green, but the Tesla ones are red. And every day Tesla trades sideways, you bleed. And that's just normal with calls. And you just have to know that. And so you have to basically, what I'm prepping for is when that rally comes, which I expect will come, but could be short-lived, I got to be willing to press the sell button on those call options. And then go to shares, you know, then jump over to shares. That's the goal. Anyway, Safe Charles. Oh, thank you for that. All psychedelic stocks up double digit. Basically, we might see some drug loss going through. Nice. Leaps the smartest options to buy. Leaps kill theta. You just need to be aware of IV at the time of purchase. Yeah, sure, okay. Look, I mean, implied volatility. You could get volatility crushed, and then you'll lose the benefits as well, obviously. But yeah, leaps help. It just depends how much money you have on you know, theta decay to see. Look, leaps don't exactly kill theta though, because if you look at something like options on, I think I did this math. If you look at options on AMD. Do this math if you're into options, which I think you can do this math. If you look at options for something that traded sideways like Apple, and you bought an 18-month leap on Apple 10 months ago, you'd literally lose almost half of your option value to theta decay by holding it for a year and the stock doing nothing. That's insane. That's crazy. Like your options value plummets. So you know, do keep that in mind. If you have a sideways trading stock for a year, it's going to bleed you. Do I sell short-term options at a loss or ride to expiration? Oh, it depends. You know, with short-term options, you have to be very, very aggressive because you could have a massive rally the day before and then be up a ton. I personally just don't do the short-term options because of that madness of, oh my gosh, you know, what if it just never comes up again, and just every day you're losing 5 to 8% on theta decay. Short-term options, you get wrecked on theta. Got to sell them quick. Yeah, seriously. You got to sell them quick. Exactly. Money and options, obviously, since derivatives market trumps stock market by a lot, makes me wonder why even go long in the first place. You know what? Go long on shares? I mean, I personally think the most beautiful thing about shares, like you buy shares of Tesla or Apple or Amazon, you can literally just sit there and laugh at the market's fluctuations. You're not forced to sell. You're not forced to time an exit. You're not forced to pay taxes. You just sit there and do nothing. It's great. You know, it's really great. All right. So anyway. Whew. Okay. Time for another coffee. We do have the course member live stream coming up momentarily, though. We'll do Q&A here. Nordstrom's starting to rotate down a little bit. Yeah, there you go. Starting to flatten a little bit. Good job, whoever got that 1 week call. I mean, that 1 week call right now, it's probably got to be up like 70%. See, if you got a 1 week call, calls, oh my gosh, 100%. If you got close to the money. Yeah, I mean, that's why 1 week calls are just so exciting. Is when a stock moves up, you can make big tendies. Sold up 55%. Good for you. That's awesome. Get your rubber straws ready. Coffee round 2. No. When you said take 10, I took, oh, well, good for you. I'm glad you took your money. All right. So Newegg. Yeah, and you have to be okay taking a profit. And I think that's sometimes the problem with options is we get into this, oh, I don't want to take a profit. I don't want to take a profit. No. Take the frickin' profit. Because on options, the profits can disappear quickly. And then sometimes it's like, oh, but if I held, I could have made more. You think like that, you end up screwing yourself. So anyway, okay, let's go run to the course member live stream. I'm going to make another cup of coffee, maybe eat a little bit, and then we'll do the course member live stream. So I'll see y'all shortly. Thank you so much for being here. If you're not part of it yet, go to the link down below. Use that 40% off coupon code expiring July 22nd. And go to meetkevin.com, sign up for those free rallies. And follow me on Instagram because I'm going to be posting stories of the rallies. And hopefully if y'all want, you could be in my stories as well. We'll kind of do stories with y'all. And the group was there, so it'll be fun. All right, folks, thanks so much. We'll see you. Bye.